Question 1. Which of the following is a key exclusion in a commercial general liability (CGL) insurance policy under the personal and advertising injury coverage? A. Injuries resulting from products sold by the insured. B. Damages arising from professional services rendered by the insured. C. Property damage caused by the insured. D. Injuries sustained by employees of the insured during their employment. Answer: B. Damages arising from professional services rendered by the insured. Explanation: the commercial general liability (CGL) policy includes exclusions to limit coverage in certain areas. One of the key exclusions under the personal and advertising injuries section is for damages arising from professional services rendered by the insured. This exclusion is particularly relevant when the insured provides professional services such as legal or medical advice. In such cases, professional liability insurance or errors and omissions insurance would be necessary to cover those risks. Option is incorrect because injuries resulting from products sold by the insured are covered under the CGL policy's bodily injury and property damage coverage. Option C is incorrect because property damage caused by the insured is typically covered under the CGL policy as well. Option D is incorrect because injuries sustained by employees during their employment are typically covered under workers' compensation insurance, not under the CGL policy. Question 2. Mr. Clark, the owner of a small retail store, purchased a business owner's policy BOP for his business. He is concerned about potential losses if his business were to be interrupted due to a covered event. Which of the following coverages is typically included in his BOP to address this concern? A. Business income without extra expense. B. Personal and advertising injury. C. Property and transit coverage. D. Workers' compensation insurance. Answer A. Business income without extra expense. Explanation: the business owner's policy BOP includes coverage for business income that is lost due to a covered event that disrupts the normal operations of the business. The business income without extra expense coverage typically compensates the business owner for lost income due to events like fire, theft, or vandalism that temporarily close the business. However, it does not cover additional expenses incurred to continue business operations, which would be covered under the extra expense provision if added. Option B is incorrect because personal and advertising injury is typically covered under the commercial general liability (CGL) policy, not a BOP. Option C is incorrect because property and transit coverage is not typically included in a standard BOP. This would typically need to be added via an endorsement or might be covered under a commercial property insurance policy. Option D is incorrect because workers' compensation insurance is a separate policy, not part of the BOP, and covers employee injuries or illnesses arising out of employment. Question 3. A business located in Rhode Island purchases a commercial property insurance policy that includes a vacancy provision. The insured property has been vacant for over 60 days. Which of the following is most likely to happen in this scenario? A. The policy will pay for all property damage claims regardless of the vacancy. B. The policy may not cover losses caused by specific risks, such as vandalism or water damage, if the property has been vacant for more than 60 days. C. The policy will provide full coverage for any claims, but with a higher deductible due to the vacancy. D. The property will be immediately covered by the insurer's business interruption policy regardless of the vacancy status. Answer: B. The policy may not cover losses caused by specific risks, such as vandalism or water damage, if the property has been vacant for more than 60 days. Explanation: the vacancy provision in a commercial property insurance policy specifies that the insurance company may limit or exclude coverage if the insured property has been vacant for a prolonged period, typically over 60 days. In such cases, certain perils like vandalism, theft, and water damage might not be covered. The insurer often sees vacant properties as high risks for certain types of damage, and thus certain exclusions apply after the vacancy period. Option is incorrect because the policy may not cover all claims when the property is vacant for over 60 days. Option C is incorrect because vacancies lead to coverage exclusions, not a higher deductible. Option D is incorrect because business interruption coverage is generally not tied to vacancy provisions and must be specifically addressed under business income or extra expense endorsement in the policy. Question 4. Which of the following is a characteristic of a claims-made commercial general liability (CGL) policy? A. It provides coverage for bodily injury or property damage that occurs during the policy period, regardless of when the claim is made. B. It covers claims made during the policy period for incidents that occurred before the policy was in effect, as long as the incident is reported within a specified time. C. It provides coverage only if the claim is made within the policy period, regardless of when the incident occurred. D. It automatically provides coverage for claims made after the policy period ends as long as the injury occurred during the policy period. Answer: C. It provides coverage only if the claim is made within the policy period, regardless of when the incident occurred. Explanation: a claims made policy covers claims that are made during the policy period, regardless of when the incident or injury actually occurred, as long as it is reported within the policy's coverage period. This differs from an occurrence policy, which covers incidents that occurred during the policy period, even if the claim is made after the policy has expired. Option is incorrect because it describes an occurrence policy, not a claims-made policy. Option B is incorrect because a claims-made policy does not cover incidents before the policy period, but may provide coverage for those incidents if reported within the policy's reporting period. Option D is incorrect because a claims-made policy does not cover claims made after the policy period ends unless there is tail coverage or an extension added. Question 5. In a workers' compensation policy in Rhode Island, which of the following is the responsibility of the employer in case of an employee injury? A. Pay for the injured employee's medical expenses only if the injury occurred during the workday. B. Provide the injured employee with necessary medical care and disability benefits regardless of fault. C. Pay the employee a lump sum payment for any medical expenses related to the injury. D. Cover the cost of the employee's legal defense if the employee sues for damages. Answer: B. Provide the injured employee with necessary medical care and disability benefits, regardless of fault. Explanation: in Rhode Island, under workers' compensation laws, employers are required to provide benefits to employees who suffer injuries or illnesses that arise out of and in the course of their employment, regardless of fault. This includes medical care and disability benefits, temporary or permanent, to compensate the employee for lost wages due to the injury. Option is incorrect because the employer is responsible for medical care regardless of whether the injury occurred during the workday as long as it is work-related. Option C is incorrect because workers' compensation typically covers ongoing medical care, not a one-time lump sum payment. Option D is incorrect because workers' compensation benefits typically cover medical and wage loss, not the legal defense in case of a lawsuit, which would be addressed by other forms of liability coverage. Question 6. Which of the following statements is true regarding environmental and pollution liability insurance policies? A. They only cover pollution incidents that occur within the insured's property boundaries. B. They provide coverage for both sudden and gradual pollution events, but only if the incident was unintentional. C. They exclusively cover pollution incidents that happen in specific geographic regions, such as the insured's home state. D. They provide coverage for pollution-related damages only if the pollution incident is reported within 30 days of discovery. Answer: B. They provide coverage for both sudden and gradual pollution events, but only if the incident was unintentional. Explanation: environmental and pollution liability insurance policies typically cover both sudden and gradual pollution events as long as the incident was unintentional. This policy addresses risks related to environmental contamination, such as pollution caused by the insured's business operations. It generally covers cleanup costs, third-party claims, and other damages caused by pollution incidents. Option is incorrect because environmental and pollution liability insurance covers pollution incidents that may occur both on and off the insured's property. Option C is incorrect because the policy typically covers pollution incidents worldwide, not just within a specific geographic region. Option D is incorrect because there is no universal requirement of 30 days for reporting pollution incidents, though reporting may be subject to certain time limits depending on the policy and jurisdiction. Question 7. In Rhode Island, a business owner's policy, BOP offers coverage for extra expense. Which of the following is an example of an expense that would be covered under this provision? A. Repairing a broken water pipe that damages inventory. B. Replacing a damaged air conditioning unit after a fire. C. Hiring additional staff to maintain business operations while repairs are made after a fire. D. Paying an employee's overtime wages while the employee works to recover lost inventory. Answer: C. Hiring additional staff to maintain business operations while repairs are made after fire. Explanation: extra expense coverage under BOP is designed to cover the costs of actions that the business takes to continue operations while repairs or replacements are being made after a covered loss, such as a fire. This can include hiring additional staff, renting temporary facilities, or other operational expenses that are incurred to minimize the disruption to the business. Option A is incorrect because the cost of repairing a broken water pipe would typically be covered under the property coverage, not extra expense coverage. Option B is incorrect because replacing a damaged air conditioning unit is a repair cost, which would be covered under property damage, not extra expense coverage. Option D is incorrect because paying an employee's overtime wages may not fall under extra expense coverage unless the overtime is part of an effort to continue operations. Question 8. Which of the following is a primary benefit of commercial umbrella insurance over other types of liability insurance? A. It increases the limit of coverage for underlying policies such as CGL or commercial auto. B. It automatically includes coverage for environmental pollution risks. C. It covers all types of risks, including property damage and business income loss. D. It extends the policy term for the primary insurance policies it covers. Answer A. It increases the limits of coverage for underlying policies, such as CGL or commercial auto. Explanation: commercial umbrella insurance provides additional coverage limits above and beyond the limits of the underlying policies, such as commercial general liability CGL or commercial auto insurance. This is useful when a claim exceeds the coverage limits of these primary policies. Umbrella insurance does not provide coverage for specific types of risks not included in the underlying policies. Option B is incorrect because environmental pollution coverage typically requires a separate policy, not provided by an umbrella policy. Option C is incorrect because an umbrella insurance policy does not cover property damage or business income loss. It is focused on providing excess liability coverage. Option D is incorrect because umbrella insurance does not extend the policy term of the underlying policies. It simply provides additional coverage limits. Question 9. Which of the following best describes the primary function of crime insurance in a commercial insurance program? A. It provides coverage for theft, robbery, and fraud committed by employees. B. It covers damage to the insured's property caused by natural disasters. C. It provides coverage for legal defense costs when a business is sued. D. It protects the business from data breaches or cyber attacks. Answer A. It provides coverage for theft, robbery, and fraud committed by employees. Explanation: crime insurance is designed to cover theft, robbery, and fraud that occurs within a business, especially employee theft. This policy helps businesses recover financial losses resulting from criminal acts committed by their employees or others against the business. Option B is incorrect because property damage from natural disasters would typically be covered under a property insurance policy, not a crime insurance policy. Option C is incorrect because legal defense costs are typically covered under liability insurance policies, not crime insurance. Option D is incorrect because coverage for data breaches or cyber attacks would typically fall under cyber liability insurance, not crime insurance. Question 10. Which of the following types of auto insurance coverage is required by law in most states for drivers of private passenger vehicles? A. Comprehensive coverage. B. Collision coverage. C. Liability coverage. D. Uninsured motorist coverage. Answer: C. Liability coverage. Explanation: most states require liability coverage as a mandatory insurance requirement. This coverage pays for damages to others if the insured driver is at fault in an accident, covering both bodily injury and property damage. Other coverages such as comprehensive and collision are optional and may be required by lenders if the car is financed, but they are not mandated by state law. Option is incorrect because comprehensive coverage is optional and covers non-collision related incidents such as theft or vandalism. Option B is incorrect because collision coverage is also optional and covers damage to the insured's vehicle from a collision regardless of fault. Option D is incorrect because uninsured motorist coverage is optional in many states, though some states require it. Question 11. Which of the following is NOT covered under a standard homeowner's insurance policy? A. Damage from a fire. B. Theft of personal property. C. Flood damage. D. Personal liability for injuries caused by pets. Answer: C. Flood damage. Explanation: a standard homeowner's insurance policy does not cover flood damage. Flood insurance must be purchased separately through the National Flood Insurance Program (NFIP) or a private insurer. Standard homeowners policies typically cover damages caused by fire, theft, and liability for injuries caused by pets. Option A is incorrect because fire damage is covered under a standard homeowners policy. Option B is incorrect because theft of personal property is typically covered under a standard homeowners policy. Option D is incorrect because personal liability for injuries caused by pets is generally covered under a homeowners policy's liability section. Question 12. Which of the following is an example of a moral hazard in insurance? A. A business refuses to install fire sprinklers due to the cost of installation. B. A driver who has a comprehensive auto policy deliberately damages their vehicle to claim insurance money. C. A homeowner buys a home in an area prone to natural disasters, knowing the risk. D. A person refuses to wear a seatbelt because they have high medical coverage. Answer: B. A driver who has a comprehensive auto policy deliberately damages their vehicle to claim insurance money. Explanation: a moral hazard occurs when a person or entity engages in behavior that increases the likelihood of a loss because they do not bear the full financial consequences. In this case, the driver deliberately damaging their vehicle to claim insurance money is a clear example of moral hazard. Option A describes a business decision based on cost, not a deliberate action to increase the risk. Option C describes a person assuming risk knowingly, which is not a moral hazard. Option D involves personal behavior but does not specifically describe an attempt to manipulate the insurance system. Question 13. In commercial property insurance, the coinsurance clause typically requires the insured to carry insurance equal to what percentage of the property's value to avoid a penalty in the event of a loss. A. 50%, B. 80%, C. 90%, D. 100%. Answer: B. 80%. Explanation: the coinsurance clause in commercial property insurance typically requires the insured to maintain insurance for at least 80% of the property's value. If the insured carries less than the required amount, they will face a penalty in the form of a reduced payout on claims. Option A is incorrect because the standard requirement is 80% for coinsurance. Option C is incorrect because while some policies may require higher coverage, 80% is the typical threshold. Option D is incorrect because 100% coverage is not typically required unless stipulated in the policy. Question 14. Which of the following is true about subrogation in insurance? A. It allows the insurer to pay the claim and then recover the amount from a third party responsible for the loss. B. It prevents the insurer from seeking reimbursement for any payments made under the policy. C. It allows the insured to sue the third party responsible for the loss directly. D. It prevents the insured from filing a lawsuit against the third party. Answer A. It allows the insurer to pay the claim and then recover the amount from a third party responsible for the loss. Explanation: subrogation is the process by which an insurance company can recover the money it has paid to the insured for a loss from the third party responsible for the loss. This helps to prevent the insurer from bearing the full financial responsibility and helps keep premiums lower. Option B is incorrect because subrogation specifically allows the insurer to recover payments made. Option C is incorrect because subrogation is the insurer's right, not the insured's right, to recover from a third party. Option D is incorrect because subrogation does not prevent the insured from pursuing their own legal action. Question 15. Which of the following is an example of strict liability in insurance? A. A business is found liable for damages caused by a faulty product even though they were not negligent. B. A driver is held responsible for an accident even though they were not at fault. C. A homeowner is required to maintain their property to avoid negligence. D. A manufacturer is sued for damages after failing to perform due diligence. Answer A. A business is found liable for damages caused by a faulty product even though they were not negligent. Explanation: strict liability holds a party responsible for damages or injury regardless of fault or negligence. This is commonly applied in cases involving defective products or inherently dangerous activities. The business is liable for the defective product even if they were not negligent in its creation or sale. Option B is incorrect because liability based on fault or negligence is not strict liability. Option C is incorrect because negligence, not strict liability, applies to homeowners in this case. Option D is incorrect because failing to perform due diligence is more closely related to negligence, not strict liability. Question 16. Which of the following best describes loss of use coverage under a homeowner's insurance policy? A. It covers the cost of repairs to the home after an accident. B. It provides coverage for temporary living expenses if the home is uninhabitable due to a covered loss. C. It reimburses the homeowner for the cost of stolen property. D. It covers loss of income for the homeowner while the property is being repaired. Answer: B. It provides coverage for temporary living expenses if the home is uninhabitable due to a covered loss. Explanation: loss of use coverage is part of a standard homeowner's insurance policy and covers the additional living expenses, such as hotel bills and restaurant meals, that a homeowner incurs if their home becomes uninhabitable due to a covered loss like a fire or storm. Option A is incorrect because repairs to the home would be covered under the property section of the policy, not loss of use coverage. Option C is incorrect because theft of property is covered under personal property insurance, not loss of use. Option D is incorrect because loss of use covers living expenses, not lost income. Question 17. Under a professional liability insurance policy, which of the following is typically excluded? A. Alleged errors or omissions related to professional services. B. Bodily injury caused by the insured's negligence. C. Personal injury caused by the insured's acts. D. Claims arising from the insured's criminal acts. Answer D. Claims arising from the insured's criminal acts. Explanation. Professional liability insurance typically covers claims arising from errors or omissions in professional services such as negligence, failure to deliver services, or breach of professional duty. However, it generally excludes claims arising from criminal acts, fraud, or intentional misconduct. Option is incorrect because errors and omissions in professional services are covered under professional liability. Option B is incorrect because bodily injury caused by negligence is typically covered under a general liability policy, not professional liability. Option C is incorrect because personal injury caused by the insured's acts like defamation is covered under professional liability. Question 18. Which of the following is a feature of a guaranteed renewable health insurance policy? A. The insurer can cancel the policy at any time. B. The premium can increase at the insurer's discretion. C. The policyholder can renew the policy only for 1 year. D. The policy cannot be cancelled by the insurer during the term, but premiums may increase. Answer D. The policy cannot be cancelled by the insurer during the term, but premiums may increase. Explanation. A guaranteed renewable health insurance policy guarantees that the policyholder can renew the policy for a specified period, often for a lifetime, as long as premiums are paid, but the insurer can increase premiums at renewal. The insurer cannot cancel the policy except for non-payment of premiums or fraud. Option A is incorrect because the insurer cannot cancel the policy during the term. Option B is incorrect because the premium increase is generally subject to the insurer's rate increase policies, not discretionary. Option C is incorrect because the policyholder is guaranteed to renew the policy beyond 1 year, subject to premium adjustments. Question 19. Which of the following is typically covered under health insurance policies with preventive care provisions? A. Emergency surgery for an injury. B. Routine physical exams and vaccinations. C. Treatment for chronic illness. D. Emergency room visits for non-accidental injuries. Answer B. Routine physical exams and vaccinations. Explanation. Preventive care under health insurance includes services designed to prevent illness or detect problems early, such as routine physical exams, vaccinations, and cancer screenings. These services are typically covered without a deductible or copay. Option A is incorrect because emergency surgery for an injury is covered under medical treatment provisions, not preventive care. Option C is incorrect because chronic illness treatment is not typically considered preventive care. Option D is incorrect because emergency room visits for non-accidental injuries are covered under emergency care provisions, not preventive care. Question 20. Which of the following is true about a rider on a life insurance policy? A. It is a type of policy that guarantees a specific death benefit. B. It allows policyholders to add coverage or modify their policy. C. It reduces the overall premium cost of the policy. D. It cancels the policy if the insured reaches a certain age. Answer B. It allows policyholders to add coverage or modify their policy. Explanation. A rider is an add-on to a life insurance policy that allows the policyholder to modify or enhance their coverage by adding additional benefits or options, such as accidental death or disability coverage. Riders can be added for an additional premium. Option is incorrect because a rider does not guarantee a specific death benefit, but modifies or adds coverage. Option C is incorrect because riders generally increase the policy's cost, not reduce it. Option D is incorrect because a rider does not cancel the policy upon reaching a certain age. It can provide additional coverage options. Question 21. Which of the following is a feature of term life insurance? A. It provides coverage for a specified period but does not accumulate cash value. B. It accumulates cash value that the policyholder can borrow against. C. It provides coverage for the policyholder's entire lifetime. D. It can only be purchased by individuals under the age of 30. Answer A. It provides coverage for a specified period but does not accumulate cash value. Explanation. Term life insurance provides coverage for a specific period, e.g., 10, 20, or 30 years, and does not accumulate cash value like whole life insurance. It's typically less expensive than permanent policies because it doesn't have an investment component. Option B is incorrect because term life does not build cash value. Option C is incorrect because whole life insurance, not term life, provides lifetime coverage. Option D is incorrect because term life can be purchased by individuals of any age, though premiums are higher for older policyholders. Question 22. In a business owner's policy, BOP, which of the following is generally NOT covered? A. Property damage caused by fire. B. Liability for bodily injury caused by the business operations. C. Employee theft. D. Flood damage. Answer: D. Flood damage. Explanation: a business owner's policy BOP typically covers property damage, e.g., fire and liability coverage, e.g., bodily injury for standard business risks, but flood damage is usually excluded. Businesses can purchase separate flood insurance through the National Flood Insurance Program and FIP or private insurers. Option is incorrect because fire damage is covered by a standard BOP. Option B is incorrect because bodily injury caused by business operations is typically covered. Option C is incorrect because employee theft is generally covered by a BOP. Question 23. Which of the following types of insurance would typically be required for a landlord who rents out multiple properties? A. Homeowners insurance. B. Renters insurance. C. Landlord insurance. D. Auto insurance. Answer: C. Landlord insurance. Explanation: a landlord insurance policy, also known as a dwelling fire policy, is specifically designed for property owners who rent out homes or apartments. It provides coverage for the building, loss of rental income, and liability. Homeowners insurance is for personal homes, while renters insurance is for tenants. Option is incorrect because homeowners insurance is not designed for rental properties. Option B is incorrect because renters insurance is for tenants, not landlords. Option D is incorrect because auto insurance does not apply to rental properties. Question 24. Which of the following is true about a whole life insurance policy? A. It provides lifelong coverage and has a cash value component. B. It is a form of term life insurance with lower premiums. C. It only covers the policyholder for a set number of years. D. It is only available to individuals under the age of 50. Answer A. It provides lifelong coverage and has a cash value component. Explanation: whole life insurance provides coverage for the insured's entire lifetime and includes a cash value component which grows over time and can be borrowed against. It is more expensive than term life insurance due to the cash value accumulation. Option B is incorrect because whole life insurance has higher premiums compared to term life. Option C is incorrect because whole life insurance provides lifelong coverage, not a set number of years. Option D is incorrect because whole life insurance is available to individuals of various ages, though premiums may be higher for older applicants. Question 25. Which of the following is covered under a general liability insurance policy for a business? A. Damage to the business's own property. B. Employee injuries while on the job. C. Bodily injury or property damage caused by the business's operations. D. Loss of income due to a fire. Answer: C. Bodily injury or property damage caused by the business's operations. Explanation: general liability insurance covers claims for bodily injury and property damage that result from the business's operations or products. It does not cover damage to the business's own property, employee injuries, or loss of income from a fire, which would require separate coverage. Option is incorrect because damage to the business's own property is covered by property insurance. Option B is incorrect because employee injuries are covered under workers' compensation insurance. Option D is incorrect because loss of income is covered under business interruption insurance. Question 26. Which of the following is NOT, a benefit of long-term care insurance? A. Coverage for medical expenses related to chronic illnesses. B. Coverage for custodial care in a nursing home or at home. C. Coverage for home modifications, such as wheelchair ramps. D. Coverage for temporary injuries or illnesses. Answer: D. Coverage for temporary injuries or illnesses. Explanation: long-term care insurance is designed to cover costs associated with chronic illnesses, disabilities, or the need for custodial care, which includes assistance with daily living activities like bathing and eating. It does not cover temporary injuries or short-term illnesses, which are typically covered under regular health insurance. Option is incorrect because long-term care insurance can cover medical costs related to chronic illnesses. Option B is incorrect because long-term care insurance provides coverage for custodial care, whether in a facility or at home. Option C is incorrect because long-term care insurance may cover the cost of necessary home modifications. Question 27. Which of the following describes underwriting in the context of life insurance? A. The process of determining the premium amount based on the applicant's health and lifestyle. B. The process of collecting premiums from the policyholder. C. The process of paying out the death benefit to the beneficiary. D. The process of marketing life insurance policies to consumers. Answer A. The process of determining the premium amount based on the applicant's health and lifestyle. Explanation. Underwriting is the process by which an insurance company assesses the risk of insuring an applicant. This includes evaluating the applicant's health, age, lifestyle choices, and other factors to determine the premium amount and whether the application is approved. Option B is incorrect because collecting premiums is a function of the insurer's administration, not underwriting. Option C is incorrect because paying out the death benefit is part of the claims process, not underwriting. Option D is incorrect because marketing insurance policies is a sales activity, not underwriting. Question 20. Which of the following is typically excluded from a disability income insurance policy? A. Injury caused by a car accident. B. Illness or injury that occurs while on the job. C. Self-inflicted injuries or injuries caused by attempted suicide. D. Temporary illness, such as the flu. Answer. C. Self-inflicted injuries or injuries caused by attempted suicide. Explanation. Disability income insurance typically excludes coverage for injuries that are self-inflicted or caused by attempted suicide. These are considered intentional acts that the policy is not designed to cover. Option A is incorrect because injuries from car accidents are generally covered unless the policy contains specific exclusions for reckless driving. Option B is incorrect because injuries or illnesses that occur on the job are typically covered by workers' compensation insurance, not excluded from disability policies. Option D is incorrect because temporary illnesses such as the flu can be covered if they result in long-term disability. Question 29. In the context of auto insurance, what is the purpose of collision coverage? A. To pay for repairs to your car if you are at fault in an accident. B. To cover damage to another person's property if you are at fault. C. To cover damage to your car if another driver is at fault. D. To cover the cost of medical bills for injuries from a car accident. Answer A. To pay for repairs to your car if you are at fault in an accident. Explanation. Collision coverage pays for damage to your car if you are at fault in a collision or if you hit another object, such as a tree or guardrail. It helps repair or replace your vehicle after an accident, regardless of who was at fault. Option B is incorrect because liability coverage covers damage to another person's property if you are at fault. Option C is incorrect because collision coverage covers your own vehicle, not the other driver's vehicle. Option D is incorrect because medical payments or personal injury protection (PIP) covers medical bills, not collision damage. Question 30. Which of the following is NOT covered under a standard renter's insurance policy? A. Personal property loss due to fire or theft. B. Liability for injuries that occur on the rented premises. C. Damage to the building itself. D. Temporary living expenses if the rental unit becomes uninhabitable. Answer. C. Damage to the building itself. Explanation. Its standard renter's insurance policy covers personal property loss liability for injuries on the rented premises and temporary living expenses if the rental unit is uninhabitable. However, it does not cover damage to the building itself. The landlord typically carries property insurance to cover structural damage.